All right, so let's dig into Salesforce. We're looking at a company that's sending some seriously mixed signals right now. On one hand, its recent performance has been, well, solid, but not exactly exciting. But then you look at Wall Street, and the analysts are incredibly bullish. So what's the real story here? Let's decode what the experts are saying. This line from Bank of America Securities, I think, just perfectly captures the mood. Salesforce hit its targets, sure, but nobody was blown away. The results didn't set the world on fire. They were fine, but, not inspiring. And right here, this is where the puzzle really starts. You've got these just okay results on one side. I mean, subscription revenue has been stuck around 9% growth for like 4 quarters in a row. But on the other side, a huge majority of analysts are stamping buy or overweight on the stock. It just makes you wonder, if the results are merely fine, why are the experts so incredibly optimistic? Well, the answer really lies in two totally competing stories that analysts are telling about the company's future. You have the bear case, and then you have the bull case. So first, let's unpack the reasons for all this caution. This is what we call the bear case. It's the story that those kinda uninspiring Q2 results seem to be telling. And what's really interesting here is that it's not like every analyst has a different concern. Nope. They're all pretty much pointing to the exact same set of risks. The worries really boil down to a few key things. First, growth in their main products, the sales and service clouds. It's slowing down as they get bigger. And the competition, it is absolutely massive. Morningstar also points out that there's always a risk when you're trying to integrate huge acquisitions and roll out a complex AI strategy. And then on top of all that, BofA makes a great point. If the economy slows down, big software projects are usually the first things that companies cut back on. This skepticism isn't just about Salesforce. Morgan Stanley really frames this bigger anxiety by asking this really provocative question: is SaaS dead? And that reflects a genuine fear in the market that maybe, just maybe, the golden age of explosive growth for cloud software is kinda over. This really shows you what Salesforce is up against. I mean, they're not just fighting off little startups anymore. This is a straight-up heavyweight fight. You've got Microsoft bundling Dynamics 365 with Azure and Office. You've got Oracle, SAP, and Adobe, who are all deeply dug into the enterprise world. The competitive landscape is just fierce. Okay, but that is only half the story. Let's switch gears and look at the bull case, because this paints a completely different picture. And it's the reason for all that analyst optimism. The entire bullish argument, pretty much everything, pivots on this one single massive number. While the core products are slowing down, Salesforce's Data Cloud and AI division is just exploding. We're talking 120% year-over-year revenue growth. And get this, it's held that crazy pace for 2 quarters in a row now. And this isn't some fluke. Analysts over at BofA see this as tangible, concrete proof of a coming AI-driven reacceleration. They're betting that this is the new engine that's going to power the company's next big growth phase, making that slowdown in the core business look like a temporary little blip. And we are seeing real tangible momentum here. Look at the adoption of their new AI tools, which analysts are calling Agentforce. Just look at this progression. The number of big companies piloting the tech has jumped significantly. Then, Morgan Stanley highlights that customers are actually moving from just trying it out to putting it into production at a 60% sequential clip. And when you look ahead, the pipeline for large deals is growing at nearly 20%. That's real traction. And this growth isn't just hype. It's not just buzzwords. It's already translating into significant, real revenue. According to both BofA and Morgan Stanley, the Data Cloud and AI business is already running at a $1.2 billion annual clip. So the bull case is pretty clear. It's a massive pivot to AI. But can the company actually afford to pull off such an ambitious transformation? Where's the money coming from? To answer that, we've got to look at a metric called free cash flow, or FCF. The simplest way to think about it is it's the actual cash a company has left over after paying all its bills and investing in its future. It's a huge indicator of financial health and, more importantly, flexibility. And when you look at the numbers for Salesforce, wow, this company is a cash-generating machine. Free cash flow is on a strong upward trend, and BofA was super encouraged that the company actually raised its forecast for FCF growth for the upcoming fiscal year to a really solid 12 to 13%. This strong cash position is basically the fuel for its entire future. It's what allows Salesforce to pour money into AI research and development, while at the very same time, it can signal maturity and confidence by starting its first ever quarterly dividend and funding a massive share buyback program.
Okay, so we've got these two competing stories, right? The cautious bear case and the super optimistic bull case. So, where do the experts actually land when it's all said and done?
Well, despite the very real concerns of the bear case, the verdict from analysts is clear, and it is decidedly bullish. Botha Securities is sticking with a buy rating and a $325 price objective. Morningstar agrees, calling the shares attractive with a $325 fair value. And Morgan Stanley, they're the most optimistic of all, with an overweight rating, which is basically a buy, and a huge $405 price target. What they're essentially saying is, look, don't get distracted by today's steady, uninspiring results because they don't reflect tomorrow's massive opportunity. They're totally willing to look past the current slowdown because they see all the pieces coming together for that AI-driven reacceleration we were just talking about.
Morgan Stanley really captures this whole idea with a simple but really powerful phrase, awaiting the harvest. The idea is that Salesforce is planting the seeds of its future growth right now, in AI and in the data cloud, and the real payoff, well, that's still to come. So, the key takeaway from all this analysis is that Salesforce is at a really crucial turning point. The company is betting its entire future on AI, and the success of that bet and whether it can convince investors to be patient enough to wait for that harvest is what will ultimately determine the next chapter of its story.